The US dollar, most of us barely think about it, but globally, it's the world's default currency, the backbone of international trade. When countries buy oil or companies trade across borders, it's usually in dollars. This gives the US immense power. Lately though, there's been nervous talk. Is the dollar's reign ending? Are countries like China ready to ditch the US financial system? If the world stopped wanting dollars, the US economy would face serious trouble. What's behind the anxiety? In early 2025, abrupt US tariffs rattled global markets. Stocks, bonds, and the dollar all fell together, a rare and alarming event. Normally, when stocks drop, investors buy US bonds for safety. But when both are sold, it signals a loss of trust. The dollar's dominance isn't guaranteed. It relies on global trust in US stability and institutions. When unpredictable policies shake that trust, countries start thinking about backup plans. The world isn't abandoning the dollar overnight, but cracks are showing. Other nations are quietly preparing alternatives, just in case. The real story? It's about trust. And what happens when it starts to erode? The US can't assume its privileged position will last forever. The next chapters are being written right now, as the world watches and weighs its options. The question isn't if the dollar will fall, but how the US responds to these warning signs. And that's where our story begins. Let's break down the April 2025 scare. President Trump's tariffs sent the Dow tumbling, and headlines screamed about a $42 billion capital flight. But did global investors really flee US assets in a panic? Not quite. Official data shows no evidence of a sudden massive sell-off. The scary numbers were mostly hype. Treasury yields didn't explode, they actually fell as inflation cooled and the Fed signaled possible rate cuts. The lessons sudden US policy shifts do spook investors, but the system is more resilient than the panic suggests. The US financial system is like a giant ocean liner. It takes more than one bad announcement to turn it around. The real risk is not a dramatic collapse, but a slow erosion of confidence. Separate the signal from the noise. Unpredictable policies matter, but wild speculation doesn't. The world is watching for stability, not drama. The dollar's status is strong, but not unbreakable. The April panic was a warning, not a disaster. The real danger is if these shocks become routine. Trust is the foundation, and it's being tested. That's the fact behind the fiction. Now, let's talk about China, the world's second largest economy and a major holder of US debt. China owns over $750 billion in US Treasuries. This financial link keeps US borrowing costs low and supports the American economy. If China dumped its US bonds, it would hurt both countries. It's financial mutually assured destruction. Despite rumors a sudden sell-off is unlikely, China would lose too much. But China isn't satisfied with the status quo. It's pushing for more global use of its own currency. The yuan deals with countries like Russia and Brazil bypass the dollar, slowly chipping away at its dominance. During the US market panic, Chinese markets showed resilience. The yuan even gained strength. China's strategy isn't to sink the dollar overnight, but to build alternatives and reduce dependence. This is a long game. China is building its own financial infrastructure and inviting others to join. The US and China are locked in a financial chess match, not a shootout. The world is watching to see which system proves more stable. The dollar's dominance is being challenged, but not overthrown. The real shift is gradual, not sudden. China's moves matter to your wallet, because they shape the future of global finance. The question is, who will the world trust more? Currency war sounds dramatic, but today's reality is more like a tense standoff. Countries sometimes devalue their currencies to boost exports, but right now, it's more about strategic moves than outright war. US tariffs aim to counter China's currency policies, but these tools are blunt and can backfire. Instead of a coordinated effort, we see unpredictable announcements and rising mistrust. China is promoting the yuan, the US is reasserting its dominance, and other countries are watching, weighing their options. There's talk of China excluding US investors from IPOs, evidence of growing strategic rivalry. Unlike the 1985 Plaza Accord, today's environment is confrontational, not cooperative. No grand deals, just unilateral moves and uncertainty. It's a high-stakes staring contest, not a full-blown battle. The risk isn't open conflict, but a breakdown in trust and communication. The world's financial system is becoming more fragmented. The outcome depends on who blinks first or who adapts best. The stakes couldn't be higher. So, is the dollar doomed? Not yet. There's no real alternative. The euro has issues, and the yuan isn't fully trusted or convertible. US markets remain the world's deepest and most transparent, but trust is no longer automatic. The April 2025 turmoil was a warning. The world needs the dollar, but patience is wearing thin. The real threat isn't collapse, but a slow erosion of confidence, leading to higher borrowing costs and less global influence for the US. A fragmented system would make trade and investment harder for everyone. The US would still be powerful, but not unrivaled. The future of the dollar depends on US choices, stability, predictability, and responsibility. If chaos continues, the world will look for alternatives faster. The biggest risk isn't foreign rivals, it's self-inflicted wounds. The dollar's fate is in America's hands. The world is watching and waiting. Trust is the currency that matters most.